Greetings, market rebels. Welcome to this week's macro measure. It's Sunday, April 30th, 2023, a little after 1 p.m. on the East Coast. I'm Wayne, my partner Ryan's working on our market outlook, market overview for this week. And let's get started on taking care of business. We'll get our disclaimer flashed here. And then we will move into the intellectual property rights notice. And then we will move into this week's program, which is short because it has to be. I had some personal obligations for my family that I had to attend to this morning. And Ryan wants to get things out sooner rather than later. So we're going to need to do the best we can under a little bit of time pressure. But I'm just going to flash things from the past and probably just leave these on for a few seconds. These are from last week. The next one will also be from last week. This is stuff that I think this is some stuff that I've got woven into today. And then here's the prior week. And I'll leave that up for just one more second. And then you can see the back burner factors. And you can see the not fully priced in my opinion, factors. This goes back, and of course, there's even more. So you can go back and check these out in other videos. I think that's the final one, but I figured at least if you wanted to pause, we could pause it and you could take a snapshot and check things out. But I think what it attests to, as I kind of reposition everything, I'll just have to stop sharing briefly, is what it really attests to is how we try to adapt, right, to the market, even with how we cover things and what kind of information we include. So let me reposition and let me just start out with a chart, and then we will move on from there. So I just need to grab the right screen, and that should be screen 4. Share that. We should be up and running on screen 4. So I've got some browser tabs that I just don't see how I cannot go through. I'm going to just skip over a lot of the stuff that I say virtually every week, except for the fact that it just continues to be a very, very interesting year, in my opinion. And I think, as I noted last week, I think we had a great start to the year in terms of opportunity in both directions at times. But April really wasn't all that great. And until, right, the last 4 sessions where they moved things off the lows, I guess I should say the last 3 sessions, which I know is tough to see, but where they move things from Tuesday's low right back up. And so this is interesting in and of itself. What I'd like to do is get my kind of planned program up here. And I'm going to start out and go back to my PowerPoint as well for reference, which should be right here. Move this out of our way so I can take a look at things and make sure we're on the right track, because there's so much to cover as usual. But we put this out, of course, every Sunday, and then the newsletter goes out every Sunday. Sorry, strike that, reverse it. This portion down here, markets overview, goes out every Sunday, and then we republish it, of course, in the newsletter on Monday afternoon, typically, for most services. And this is really important because in my opinion, one of the most important things I think you've got to maybe print out and keep off to the side every week when you're in earnings season is this, right? These, especially when you have these big movers, Microsoft, Alphabet, right? Well, Visa's obviously important as well. And the kind of list goes on, but then you had Meta and Amazon. And we noted, of course, right, that we were wishy-washy, as some people call it, again last week coming in, because really it all depended on what they were going to do with those earnings. And we reminded everyone, as we usually do, and I'm not this is not a pat on the back thing, but I just get the sense that some people don't realize how important this is. We reminded everyone how the gang that effectively controls the market, how they really manipulate it, right? So they took the earnings of 2 companies, and there was a tweet by Sven, I think Sven Henrich, and it just, this was great. This came out on the 25th. Sven Henrich market summary: 2,221 stocks declined during the day. two stocks rally futures after close. And that's exactly what we have been alluding to with respect to how these guys operate really since we started Market Rebellion, other things in the past. Well, once you watch how they operate, they use these major weights to mask a lot of the issues that are under the surface. And especially when they have a chance to run them on EPS and really goose the indexes up because of the heavy weightings that these have in things like the Qs and the SPY. So you've got to be on guard for that, which is why you should definitely check out our newsletter. That if you're in the services, you should really at least glance your way through it, right? It's impossible for us to compete, of course, with people that's all they do all the time, and that's your professional research firms. But we do cobble together and curate the best we can, and we want everyone to know. I mean, obviously, grabbing something like this is no big deal. It's the other things that we find that try to give perspective on what's unfolding. But what Ryan also includes is the economic calendar as well, so that you know when all this stuff is coming up, because these are really the catalysts generally, and I'd say pretty consistently, that they utilize, along with things like the FOMC and Apple next week, they utilize to really justify major movement, right? So you've got to know this is coming up. You've got to know what the potential is, right? And the Microsoft and Meta moves, I don't think I can remember too many recent jam jobs that were predicated on just a few stocks making incredible moves because they needed them to really execute the next phase of the push the market around plan. But this is important stuff to have really readily available, that you can say, okay, well, wait a minute, I really love how the stock's behaving, but tomorrow morning I'm going to be dealing with a possible whatever, this number's coming out that could possibly really change things quickly on me. Do I want to face that an hour before the options markets open? And so that might help you to roll or trim or close, or a combination of some of those, right? Any of those. So that's just my little editorial on. It's a simple thing, but this can be very, very helpful. All right. So just keep that in mind. And if you are in TNT or the momentum trading services that we offer, you're definitely familiar with what we've been talking about. And so what we've been talking about is this third year of the presidential cycle, how it tends to be by far nearly double the next best one in terms of performance. And then, of course, we're in the sweet spot right here for that. So this is possibly going to carry into this mid-year in the third year of the presidential cycle. So we're really still in the sweet spot. And so what's, I think, been fueling this, and that's despite these probabilities. The probability is rates are still going up, despite what we saw with GDP this week, which was, or I guess it was this week or last week, can't even remember, so much happening at this point. But GDP was a disappointment. And there's a lot of things I've got here just with these tabs to share that we'll take a look at things, but this is still going up, but they've got it coming off. In other words, dropping significantly very quickly after this. That is the bond markets that I'm talking about, the probability calculator that you can go take a look at from CME Group. So anyway, this is still looks like we're headed up a little bit from where we currently are. And then the hope probably is the Fed maybe changes the language to say, given some of the recent slowness we've seen, or a little bit of a hiccup here and there, we're going to take a more patient view. Now that could be potentially explosive, right? Because give these guys any excuse to try to rally, and of course they will. Ultimately, it may not be as good as they think, but remember, we're mainly focused on the short run with what we do in most of our services. So that's what really matters, is how they're going to react to it. Now, this quick reminder, another view of this cycle we've been focusing on. The cycle, I think, was, I guess, preserved by how they saved the month of April, technically, in that mad dash from Tuesday's low, really punctuated on Thursday and especially Friday, right? Because it was really, even for someone like me, I'd put it in my top 25 most brazen upside maneuvers. But we did talk about that on Cocktail Hour. Here's our 30-year sweet spot we've been talking about. We talked about that on Cocktail Hour. Just a quick reminder, we bottomed in, for the bulls out there, we bottomed in October. It's by far the most common month to bottom after a bear. And so that even that's in line. Currently right now, you're not anywhere near extreme greed. You backed off. So there could be more fuel in the tank in terms of you could really run much more strongly before you get anywhere deep into this extreme greed territory, right? So that they had a successful week there as well. And then this, the sentiment survey from AAII still, right? 10th week in a consecutive week in a row. Well, it makes sense, right? 10th week in a row, pessimism remains above average, right? So this is part of what's fueling it. I've been trying to make that case, and it's a contrarian thing when there's a lot of pessimists, when there's people like, frankly, like me, Ryan too, that do not really believe that everything's going to be smooth sailing for the economy the rest of the year. We think it's going to hit some real serious bumps in the road that could intensify. We'll see. But again, that's more of a back burner thing, which is why I listed things in some of our videos on the PowerPoints, right, that are just back burner. That's something that probably can be ignored. It often is for a while until the reality comes creeping in. I think we're starting to see something much more akin to 2007, where it was a lot of these things were just so obvious, but it didn't matter, right? There was kind of a swoon, I think, in August of that year, but then you finally topped out in November, right? So this stuff can really persist, and I think that's one reason why it's so hard for people to trade. But my sleeper scenario is back on. So before I forget to cover that, we talked about it in Cocktail Hour. And if you recall, let me pull up the SPYs, since they're the main proxy we use to really default to talking about the market. This is the wrong chart. Okay, I need the less complicated chart than that one. Let's see. This is my better chart to talk about things. So I think a lot of you may recall that I guess I'm calling it a sleeper scenario now. I really didn't have any name for it, but it was kind of like my alternative, really sneaky maneuver would be to take out and close above this high. And the reason I've been saying this for a while is because right now there's still a lot of debate. I think there still will be a lot of debate if we're in a new bull market, if we get through there and we go further. Still will be a lot, but I think it'll convince a lot of players that, wow, another really important high on the way down was taken out. The market really shifted here in October. The market then consolidated for a while. The market might have some pent up power as a result of consolidating, because the highs, even if you go back to here, you spent a few months consolidating really below that high. So that could lead to, right, this breakout potentially. Now you also can, I'll trace it out just this way, you might have a little bit of a mini head and shoulders in here as well. So some people are going to like that. Some people are going to say, this is all great. I'm a bull. The technicals are finally starting to show up. We noted that a few weeks ago, but they threw curveballs, right? The things were tilting that way. Bears had kind of reclaimed a little bit more control, but we've been, as some people have said, wishy-washy, because people want a prediction. But I'm going to, I guess, take a little bit of a victory lap for all of us, in the sense that we had a hard time all through April getting really, really full of conviction one way or the other. And you know what? The entire month, it was, I think, right to be that way, because this looked like a breakdown, but ultimately it wasn't. And now it looks like a breakout, but maybe it won't be. So this has been a tough stretch. The best trading, I think, happened this week, where we finally got some movement in some of the UOA names, some of the TNT, momentum service names. And I hope folks did well. I think they probably did. And we got some good reports already. But bottom line for me is, right, that you're not out of the woods yet. You haven't taken out that high, the recent high, and you haven't even taken out this kind of intermediate high here. Now, I do still think that things look better for bulls at this particular juncture than bears, because incoming trend to this consolidation that we've been in, that I just kind of moused over, that incoming trend was up, right? And we did leave, and we've gotten above the bear market downtrend line there in hot pink that I just clicked on right there, that's now blue. So, and we held there. So you broke that trend and you have a higher low put in, and that low is about a 38.2% retracement from you retrace from this high up here, from this low where you started on that leg. You did retrace about 38%. Well, actually, it looks like my numbers got knocked off there. I'm not sure what happened on that. Maybe I inadvertently moved that. Well, I'm going to scrap that comment because I don't want to take the time. But overall, this, if we look at this, what I may just do is ballpark it for now and then come back and fix it, because I don't want to spend that time in the video. But if we look at this whole move from October's lows, and then we come to the, I'm not October's lows, my bad, March lows, and we come to the April high, and then the back off. This again, it was just above 38.2. So this is a pretty bullish retracement so far. You're at the upper end, really, right, of the trading channel, and that doesn't look good for everyone. Let's try to expand that out. You're at the upper end of this trading channel, and you only backed off small, just above the 50 there in gold. So that's a pretty nice thing that you trampoline up from there. Now, the leadership, which we'll talk about, is pretty weak, but this thing is now on the cusp. And I think even people that are new to charting are going to say, yeah, we're on the cusp of maybe exceeding this high. And remember, there's gaps back here. We've talked about this before. This is that sort of sleeper scenario where they managed to take out this high. I think they'll get a lot of people to capitulate at that point. And they might even bring some fresh money in as on the long side. And that could then turn into more of a scramble, more of a frenzy, where you get a couple more upside percentage points that go up towards maybe like a 440 is a number I've been throwing up, because I think there's probably going to be some resistance around there. But that's a whole nother, maybe a whole nother week. Who knows? Maybe they'll take it there this week. But that would be my thoughts on this sleeper scenario that we've been talking about. But everything really technically is there for the taking, and they have catalysts, which we mentioned. They've got Apple, doesn't get much bigger than Apple, and they've got the FOMC. And these are things that if it breaks their way, and remember, I'm not doubting Apple. I know nothing about what's expected. I'm certainly not an Apple fundamental analyst, but all these, we've talked about it many times, but they all always, typically low, I shouldn't say always, but they lower the bar to make it easy for companies to jump over. It's the oldest kind of like sandbag their real number, and this way everything looks like a beat. It's been going on since I started in 92, and I'm sure it's been going on even longer than that, would be my guess. But right now you really have to like this, aside from the breadth factor. There's just poor breadth. So let's go back to we need to get this. So this is where we left off. Now let's take a look at a few more things. This is one reason why so many of these people are convincing themselves to be bulls, though. They've got some of the fastest cuts that you've seen in nearly 4 decades built into market expectation. So they think once the Fed does this maybe final raise, they'll be on their way south very, very quickly for a while to really drop things down in a big way, which I don't think I can rule out that possibility. But I do think for them to do that, I think there's going to still be a lot more fallout that will not sit well with equity longs and people that are really, I guess you would say, tactical about what they do. But speaking of that, this is what we saw, and I guess it was this week, right? This is what we saw in terms of now there's thoughts of stagflation. That's typically not a good thing, right, for the economy. There's this one here that is a 34-year veteran of the industrial packaging industry, verifies he's never seen anything like this. So just look, right, Packaging Corp's actual box shipments. Look at this. This is just cratering. I mean, quickly. Don't know exactly what correlation this has, so on and so forth. But anyway, it's kind of interesting that this is looking as bad as this looks right equivalent to the 2008, 2009 nightmare that we all lived through. Even during the COVID situation, right? This was not even a factor. You know, COVID, it held up fairly well with, I guess, a lot of people still having to order things. Another sign, right, that inventories, this is automobiles, by the way, inventories are really ticking up. They're up 22.3%. So you can go take a look at that if you want. But there's some, this is what I'm alluding to when I say there's some things that have high probabilities that argue that we should be heading higher based on what the market is telling us, while other things that have good economic track records, the yield curve inversion, all these different things, they are all have good track records, and they're all saying, no, this is not going to happen. There's going to be real serious carnage. But anyway, the point of this one is that if you get this really strong thrust above 15% in the terms of the rate of change, you can read it all right there, then you basically get yourself the start of a new bull. It's a new bull market. And here's your examples from late 02, and then you can see the aftermath. This is from 09, looks like early 09 when you'd expect, and then you can see the aftermath. This looks like after the COVID stimulus. I don't remember how much they injected that time around. Something between 7 to 11 trillion comes to mind. And now again, we've had it, right? So this is, I'm not moving all in as a bull on this. I'm just trying to present a balanced approach. This is something we already took a look at in terms of how absurd this was. But remember, we were warning against that, warning that they could do that kind of thing. You just never know if they will. Here, 32% of S&P 500 components are outperforming the broader index, lowest level we've seen since 99. This is how poor the market breadth is. Excuse me, narrowest, according to this measure, which I'm not going to go into, but this is the narrowest leadership ever in an up market, just narrowest ever. Now, I guess that means over the last 30 years or whatnot. That's about how far the data seems to go back. But take it for what it's worth. Take all this for what it's worth. Here's the big tech, the big seven, which we've been talking about, mega caps in weekend videos, in the daily webinars, in the webinar. I mean, in the write-ups, in the newsletters, during cocktail hour, right? So this is should be no surprise to any market rebel. They use the big seven, right? Ryan talks about this almost all the time, and those are up 31% to date versus 3% for the rest. So this is what it is. You know, they may drag everything along with them. For all I know, they very well may. So let me just make sure that we're seeing. I want to make sure they've got the. Okay. Just wanted to make sure this was doing the right thing there. So let's go to the next one here. We've got this recovery. Remember, the percentage of stocks above a certain moving average, we're looking at the 20, that started getting better, right? You'd expect this. So it's a little bit of an improvement, right? There's the 50, and then here's the 200. So you can see, though, that these are still way, way, way down. So they're starting to improve, as you would expect, a little bit after what we saw late last week. But bottom line is that they're all nowhere near anything really super wonderful. And remember these as well. Remember that buybacks are hitting, and this is another one just attesting to buybacks. And I think that's enough on our run. I think where it's our full run of tabs right there, and it is. So those are all my kind of reminders. Make sure you read the newsletter or at least glance at it. And what I think happened here is a lot of people were waiting for a breakdown. Now notice we've had that rectangle that I just highlighted there, and they barely exceeded the lows of that whole period. And then they reversed things strongly on, I guess I should say, on Thursday and Friday there in this particular, in the SPY. So again, this is what they do. This is why I always remind everyone, you've got to be ready for false breakouts and breakdowns. Just like I'm saying this week, my bottom line for the week is I don't think you can argue that this is not poised to want to go with this higher low, rising SMAs. A lot of people still pessimistic, a lot of people not believing in this massive fuel. It doesn't get much bigger than Apple and FOMC. And you've got all that, and they've been able to work wonders without it. No, it probably depends. Like if Apple has delivers the goods, I guess they'll celebrate. The FOMC does and says what they hope and expect, they'll probably celebrate. That's just the way that it is. So I do think you've got that fuel. I also think you've got the zero DTE breakout buyers. You've also got the fact that they've effectively defeated the VIX. The VIX looks like it's got its tail between its legs after what they did to it last week. It looked like it was on to some gold, right? And then boom, they lowered the boom on it. They just dropped the hammer, and that was it. And you're now going back to levels that you haven't seen. I thought I had a 5-year on it. Oh, I do, but it's too messy. So, but anyway, you haven't seen these levels for a while. I think you've got to go back a couple of years to get back to this level. Maybe it's back in here still. Let's see. Yeah, you've got to go back towards, it looks like summer of 21. So there you have it. So this thing looks just absolutely crushed. I think it's a good time to, again, start positioning. If you're someone who still has a hard time believing that all is well, I am not bashful about that. I'm going to be using this crushed vol to continue to position in a way that lets me not have too much at risk. And then I'm going to plan to become much more aggressive at, I hope, the right time about my downside, but owning volatility. But that looks defeated. It's probably a little overdone, just like the market's a little overdone. I don't think we get Apple till later in the week. The FOMC reaction won't happen until the middle of the week, I think 2 p.m. on Wednesday, East Coast time. So that is that in terms of when they could really pull something off. And they are getting a little bit towards overbought. It's gotten a little silly, obviously, with what we saw there. You're at 65 on the 2 hour, just to kind of reference that. But it's not crazy yet. We did see some readings that I put out there that were really getting up there on the hourly and 30-minute, things like that, when I put that out in Rebel Pit this week. So just be careful in the short run, but I do think things are primed to go. This, to me, getting this close and possibly filling gaps and exceeding a high or low, which they do very well, and bringing in new people, getting capitulation. That's really what they're great at doing. And so as much as you may think it should be breaking down here, and I don't disagree with you, it's just that you've got to be able to realize that at the time it's not a lock, right? And we see this time and time again, where these like, look, before they plunge the market pretty significantly here, right? They put a new high in for the whole pattern before reversing it there. So anytime you see these breakouts or breakdowns below what would be obvious support or resistance, make sure that it's okay to trade them in the breakout or breakdown direction. In my opinion, it's just that you've got to be on guard. The early part of that trade is a little dangerous. So what I like to do is just what I call a quick trim. And let's just say that I bought 10 contracts to make it easy. I'll just sell 1 or 2 for a modest profit. And then if it goes back down, it lets me kind of get out for break even or a little bit better back down towards my trigger level. And that way I'm really not like, just look at it. It's like like another at bat where, you didn't really do anything. You maybe got a walk, or, you had a productive at bat. It wasn't anything awful with it. But and it just, if it keeps going, of course, you still hold 80% of or 90% of what you bought, and you're still happy. So just a way to keep yourself, I think, little trick to keep yourself happy as things are still going your way. Or if they reverse on you, you're better off, right? So either way, it's a win. Is how I look at it. So that's a lot of what I wanted to cover. Calendar, mega caps. This is why we urge people to check this out so frequently. Check them out, have them taped on the wall or have them near your computer. They did save the month of April, which was really poor. I did mention that. This maintains the third year hopes. They were risk off clearly early in the week, only to then go risk on. And all we need to do on that one is check out this right here. And you should see how things were getting. Let's just take XLY. Things, it looks like it's about to get really beaten down hard. Transport's the same. Look how they come right back after it. So this was, like I said, I think this was brazen, unadulterated, basically a hit job, right? It was a markup. It was all about, again, poor sentiment, poor positioning, internal plumbing, where maybe two people had overdone it, were using some of the data to react to, drew in fresh shorts, and then put this little thing together. And anyone that saw the Meta and Microsoft reactions, I mean, I'm not saying that their quarter wasn't good. I'm not saying they don't have bright futures. I don't really know, frankly, but I am saying that those reactions were important for more than just those shareholders. They were important to the market. So I think that if we look at the rest of the charts, if we look at the Qs, they're primed to go as well, but in a different way. So they have a slightly different looking chart at this point, but you could see that they're right near the breakout level, and maybe they're getting a little bit towards 70 on RSI. So maybe you need to have a little chill out first before they try to go, if they go. But it's hard to say that they've got this low, higher low. You know, they took this high, took out all these highs. This high here took out this high, and now they're working on a couple minor higher lows right now, and they could be taking out this high very easily. So I think a lot of this is just deep pockets pushing not so deep pockets around and taking advantage of a lot of factors that are clearly negative. But it won't matter, right? If we're trying to make money from it, we just have to embrace it in the moment and manage it right prudently. And if you do that consistently, you really have something. So that the Qs to me look good. And the spiders look good. So that's pretty much the big battle. We had a diamonds hit, and I'm not sure if I got it in or not, but I'm planning on putting in a bullish trade if I haven't done so already on the DIA. We don't often see DIA UOA, but we did, and so I want to put a trade in there on that, because again, I just see there's I think I did actually put that in. I do see the possibility that thing tries to rip up and challenge the highs, but it has to fight its way through here first. But just can't shock you right at this stage. I think so many people are absolutely flustered at this point that this market has been this resilient. Again, I think it's a lot of malarkey. I'm not even going to come close to try to camouflage that. But you've got to trade the malarkey. I've been through this so many times. I can't tell you how in my earliest days, I was more about rational thinking and this, that, and the other thing. And then you just realize that these guys are operating on an entirely different playbook, and at times it has so little to do with reality, it'll boggle your mind. So that all three of those look good. I think the odd person out, or the odd item out, I should say, is IWM. And so IWM broke down. Things were not looking good, but lo and behold, it's like the magic saving hand is there right in the nick of time to save it and really reverse it forcefully. So it still broke down below this triangle. It still has its work cut out for it to get back towards the resistance of two various lines, and all these highs are kind of waiting for it right there. And that's probably a long-term flat line, honestly, near 180-ish. The 200 is right near there as well in purple. So it is what it is, right? You're going to be hitting all that, but I just can't rule it out. We'll see if it taps some of these from the underside and then rolls over again. I don't know if they get the FOMC and Apple out of their system, and then that's it, or that's just the start of even more of an extension. We'll have to see. But I would say, look, 3 out of 4 of those really do look good. The dollar has been mired in kind of an April doldrums. It hasn't been doing much. I've seen where the dollar's been up some days and the market hasn't cared. In other words, when the dollar was up, many times over the past few years, if the dollar was up, that made it really hard for the markets, and dollar and yields heading higher. But those were up a couple days and the market just really didn't seem to care. And I think that's another sign that they're just, it's kind of like they're just internal plumbing issues. So let's see what else. I do think this could be, you could see a sustained squeeze. I did want to mention that, but I wouldn't just say, hey, it gets to that 332 number at SPY and it's over. So I don't want to forget about that. I did mention that in the notes, but I wouldn't say, oh yeah, that's where it tops out. If I don't know if they'll get it there this week, I don't know if they'll even be able to move the market up one day this week for all I know. But I'm just saying, if that scenario plays out and they break out of this consolidation, it should have enough, given the height of this rectangle and the leg that came into it, so on and so forth. It really should be able to move its way up, I think, to there. I do think it can go through, because I think this could really ignite a frenzy in terms of squeezing. I think it's going to be capitulatory for a lot of people. That's just my gut instinct from having done this for so long. I can't say like I read a paper or wrote a paper on it. I'm just kind of sharing that from my own experience. So let's take a look at, TNX, another thing, right? We've been charting this on macro measure a lot because it's mattered. It's doing nothing, right? So you're not getting anything here at all. And the SMH is something we always chart, even though it's a sector, but we do chart it in macro measure because it's so important. And they've been able to do this, right? They've been able to do what they've done, even without maybe the most important sector. So imagine if they fix this. I guess that's the right word for it. Imagine if they fix this and they get it above this support line and the 20-day. If they don't, I mean, this portends kind of bad stuff to me. If they can't do that and this starts rolling over, the market may actually catch down with these if they get walloped. But for now, right, if they can get it back up and through, and they would break a resistance line that we can drop in right now, that would only help this squeeze. It would only help them with the squeeze that they're trying to orchestrate. So yeah, if this thing could get up through, let's call it 253, so about 3% more to get through there. Now it's not overbought at that point. It might have a shot to go challenge the highs in a bullish market. I know I sound bullish. People might come away sounding bullish, but remember, I'm just talking most likely scenario that I see. I think you're short-term overbought. I don't think you can rule out a little bit of little back off in front of the Fed, maybe a little squaring up where people kind of neutralize some risk. But overall, yeah, I think the bulls clearly reclaimed it. It's very, to me, it's really kind of potentially tenuous because it's a lot of hocus pocus and just obscuring of how not every stock is really behaving this way. But it is what it is, right? It is what it is at the moment. So we just have to run with it if they're able to try to break things out and just manage things. So that's really, I think, the main thrust of what I wanted to cover. I think I'll probably end up covering the rest of it in sector situation. I had to pare things down a lot anyway because I got to get this done for Ryan so he can get things out, and folks seem to miss when we send them out later. Folks seem to not have the time to watch them, so just had a personal obligation I had to address this morning for my family. So it is what it is. It was what it was. But here's the Apple chart. I think Ryan may have brought this up on Cocktail. It's pretty important. And like we've been saying, I would say, look, this looks good. It looks like it's breaking out. It's getting a little bit towards overbought, which is concerning. But as far as the development goes, you have to be happy if you're an Apple bull with how much it's been able to get back. And this thing, as you can see, the vertical nature of some of these rallies, because it's so important to the market, and we know what the gang does. They could really pin this thing and absolutely leave people slack-jawed by what could transpire. But again, it probably all depends on this EPS reaction, right? It's probably, who knows, maybe there'll be some news in front of it. Maybe there'll be whatever, someone decides to get bold and upgrade it. I don't know. But I'm just saying that you got to watch this. And if they get this thing going, remember that alone can, just like Microsoft and Meta did, that alone could really impact the market. So that's what you've got to watch for later in the week. You've got FOMC really on Wednesday afternoon. We typically do see squaring up. We have seen times where there were sell-offs in front of it, and we have seen times, of course, where there's been rallies in front of it. So if they think they've got more recently, it's been rally in front of it, and then kind of wait and see what happens. So that, just want to mention that as well. But I think that's about it, because the rest of it are just weekly reminders. I would say, look, just take a look at those if you pause and you go back to that slide. These are just kind of little things that are percolating there that are worth keeping in mind, because they do a great job of distracting people with a lot of things too. So it's just another reason why this is not an easy game. You've got to be able to kind of process what's dominating the short run and not lose sight of the intermediate term or longer term by going too bonkers with risk taking, right? So again, probably steady as she goes is probably the best way to go consistently, and that's not easy, but you get the idea. So I hope something I share with you helps you out this week, or maybe some week in the future. And sorry for the abbreviated nature of this week's program, but again, that's all back to what I had to take care of. And I want to thank everyone for tuning in, and I will see everyone through the services and the other webinars and so forth and so on. Have a great conclusion to your weekend. Thank you.